Personally, I have a slightly different view on tariffs. I think, what tariffs tend to do, and certainly you've seen it so far in Trump's second term, and you already saw it in Trump's first term, is yes, it creates this one-off impact on inflation, right? It necessarily has to because it increases the price. But then what you tend to see is through means of either, producers trying to absorb it in their margins, trying to reroute the way that they get their goods over to their final destination, but also in the way that currency markets move as well. That inflationary impact tends to dissipate over time. So I do think you get a sort of one-off impact on the headline level of inflation. And if I were the Fed, I'd sit there and go, you know what, I'm happy to look through this because what I saw in Trump's first term was that eventually this escalating round of tariffs, this tit for tat, and ultimately this global trade war that ignites and slows down the trade cycle, slows down the manufacturing cycle, ultimately comes back to bite the U.S. economy on its backside, and the Fed has to think about actually, do we need to ease rather than do we need to keep rates high for the inflationary environment? So my personal view is that tariffs, especially the uncertainty relating to tariffs, can actually be a drag on growth.
All right, Amy, I hear what you're saying, right? The tariffs and kind of like, it's not apples and oranges, but kind of like sanctions. I mean, countries, they find a workaround, as we've seen China do, right? But, other things are potentially also inflationary as well. You've got the tax cuts, you've got immigration as well. Let's leave immigration aside. It's pretty controversial and very emotional as well. But let's talk about tax cuts. At the end of the day, I mean, if you're looking for yields to maybe go higher but end the year lower, does that mean that you also think that tax cuts are going to get stuck in Congress? We're not going to get the full fat 21% down to 15. Maybe we'll end up at, 17, 18, 19 or so.
There's something along those lines, right? And I think a couple of things can get in the way of the proposed tax cuts. And ultimately, it will be some kind of a bond market riot, which is why I predict this sort of very tricky path for US 10-year yields along the way to lower. You can think about, maybe the gilt riot that you saw in the UK a couple of years ago, whereby the policies that are announced, if there is no palatable way for the market to digest the amount of issuance that may come from that announcement, be it tax cuts. And, we know that not all of the aspired tax cuts can be met with the additional revenue stream that may or may not come from increased tariffs as well. There is a gap to be filled. And if that gap is longer dated US treasuries at a time when, the US economy is doing okay, you just covered that unemployment actually went down by 0.1% in the latest reading. The labor market's okay, growth is all right, and inflation pressures are coming down. The Fed doesn't really have any incentive to be cutting rates into that environment. And so I do think that one of the tricky things with tax cuts, yes, on the margin inflationary, but I do wonder to what extent they can be put through. But when I think about the mix of whether you call it Trumponomics or Bessonomics, you've got a lot of policies that are talking about wanting yields to head lower. But when you look at the policies themselves, and you touched on immigration, tax cuts, they are inflationary in nature in that they stimulate growth, they stimulate activity in the economy. The only lever really that's left for Scott Bessent to be able to pull is the fiscal side, which is to say, well, I've got to try and slow down spending in this economy by enough so that it keeps a lid on overall growth, whilst I try to convince Chair Powell and the FOMC to keep a lid on rates and actually guide them a little bit lower. That dance is going to be a little bit difficult to achieve, but maybe a positive surprise is you see better fiscal monetary coordination out of this administration.